Hey everybody, welcome back to Chipstock Investor. Hope you're having a great day. We're going to be talking about Salesforce today. Software companies have been on quite the run the past few months, and if you haven't checked out our most recent video yet on our non-chip stock picks of 2024, we reviewed how Salesforce did in that video. We'll continue that discussion a little bit today by talking about the AI agents that are part of Salesforce. And we'll also discuss a small adjustment that we made to our portfolio.
Yep, thanks NVIDIA for that. More NVIDIA just moving the market out there, folks.
If you missed the video that we did on Salesforce in September, CRM had another sizable sell-off at that time, and we reiterated our bullish view on the company. In general, it's been a bit of a bumpy ride for Salesforce this year, 2024. Before we continue, quick shout out to the sponsor of today's video, public.com. They have a great new bond account for your uninvested cash.
Yeah, especially for that cash that maybe you're trying to hold on the sidelines, stuff that you may need within the next 5 years, and you may need to tap into those investment accounts. Bonds actually might be a pretty decent place to stash that money. For the time being, you can actually lock in upwards of 6% annualized yield with that bond account from public.com.
Yeah, absolutely. As the Feds lower interest rates, that can also lower interest rates in your savings account. So having a bond account with a locked in rate may make a lot of sense for that uninvested cash. Like Nick said, you can lock in that rate upwards of 6% if you open that account at public.com/CSI. Link in the description below, public.com/CSI. Thanks for sponsoring today's video. In that last chart, you saw quite the dip in the summer months, and it appeared that the market was feeling like software as a service was toast. In September, Klarna said that they planned to shut down their software as a service providers, which would include Salesforce and Workday. But we talked about this when the news came out. We really feel that Klarna is doing some IPO window dressing rather than actually being indicative of what's happening with software companies.
Yeah, that said, AI is changing the name of the game for a lot of these enterprise software providers, Salesforce included. So also during those summer months, CEO and co-founder of Salesforce, Mark Benioff, started making acquisitions again. Perhaps there were a few nervous shareholders over what might happen if he started making purchases again, like they did during the pandemic, and perhaps egregiously overpaid for some of those purchases at that time. This isn't really a return to the old acquisition spree minded Salesforce of the past. We'll circle back to this again later, but what the company was really trying to do was build out some of the infrastructure software it needed around its new data cloud product and the AI products built atop data cloud. So they bought this company, own less than $500 million spent in this last year on acquisitions, most of that coming just from this one acquisition alone. And then hot on the heels of that announcement, Salesforce's annual developer conference, Dreamforce, they announced a couple of new data and AI development deals. Of course, NVIDIA, what's an AI deal without getting NVIDIA involved these days? So you can see in those press releases, some of these surrounding the buildup of the data cloud product, and then the deal with Google, getting Google Workspace into the mix there. So if companies have a lot of data on Salesforce, but also use Google Workspace, like maybe just good old-fashioned Gmail, getting all that stuff integrated together for companies to use.
Ultimately, the fruit of that labor, at least currently, is Agentforce. Those are AI agents that Mark Benioff has been trumpeting, and he's been doing that while dogging a bit on Microsoft's abilities in AI agents.
Yeah, he certainly has. AI was mentioned quite frequently, and Agentforce and Data Cloud mentioned quite frequently in the Q3 quarterly earnings update. But I think maybe we need to pause here for a moment. We haven't addressed this yet, and we probably should because we've talked about it numerous times. What is an AI agent, and how is that different from RPA, or robotic process automation? And RPA, that might be from a software vendor like NICE or UiPath, which we addressed in the September video a few months ago about Salesforce. For reference, we did finally cut bait on UiPath stock. Here are a couple definitions on that. RPA up at the top. RPA is a software-based robot, one that doesn't have a physical body that performs the same task over and over and over again, taking away some repetitious things, maybe like data entry into a form. A little bit different from that is an AI agent that actually has a bit of autonomy to collect data and come to some sort of conclusion or take some sort of action without explicit human input on exactly what is expected of it. So it's allowed to come up with a solution and resolve some sort of problem. This could be something as simple as like an AI chatbot that you see pop up on a website that you visit that asks if you have any questions. That could be an AI agent.
Salesforce needs to build out its infrastructure, software, and data management capabilities for the AI era. And so that's what they've been doing. Nick, maybe you can explain that a little bit more with this visual.
So this is a visual representation of Salesforce Data Cloud, a very simplified visual, but perhaps in your workplace, you have a bunch of unstructured data and it's coming from all over the place. You can see some of those Google Workspace apps listed there on the left. Maybe it's a slide presentation. Maybe you have a bunch of PDFs and Excel spreadsheets. Perhaps it's messages on Slack, voice memos, emails, all that stuff. It's unstructured. How do you get it formatted in such a way that it can become useful to an AI agent or for other software, perhaps analytics? So this is what Data Cloud is essentially doing. It's a way to create a unified place to store all of that data. It's automated. The categorization of that data is automated, and then it's assembled in such a way that it can then be used by that AI agent. And so now with this repository of a company's Salesforce data and other company data, especially on customer relationships, they have now built this new product called Agentforce. Those are the AI agents that can be programmed to do all sorts of things. Benioff and company really pitching this as a way to augment a company's existing workforce and a way to help employees get more done in the same amount of time as before. And thus the dogging a little bit on Microsoft and its mixed bag with what it's been able to do with AI agents thus far. So basically, Salesforce Enterprise Software as a Service company, one of the pioneers of that whole software as a service model in the first place, moving both down the infrastructure stack into more infrastructure, as well as up the stack with new products like AI agents.
It is the early days for this endeavor, and it certainly seems like Data Cloud is the most notable organic product launch that Salesforce has had for quite some time. But there's a lot of skepticism surrounding this. If you jump on Reddit, you will see some of that skepticism from developers regarding Agentforce, which is the product atop Data Cloud. However, there are some positive things coming out of this as well. We borrowed this slide from our presentation back in June, talking about companies like Rocket Mortgage using this Agentforce.
Specifically on this Data Cloud, let's get into the business model aspect of this a little bit. There were some hints in this quote that Casey is talking about here about this not being a specific revenue segment that Salesforce breaks out or categorizes yet. It seems like Data Cloud is really a part of all of Salesforce's other existing product types or revenue lines. And in particular, it sounds like perhaps the Marketing Cloud has gotten some specific attention with this Data Cloud product. You can see in the slide, marketing and commerce, 4 lines down, and revenue growth rate just 8% up year over year in Q3. Sales also getting some attention with Data Cloud. Integration and analytics, that's MuleSoft and Tableau. If that doesn't accelerate off of the 5% growth rate in this last quarter, that's really going to be chalked up as a big missed opportunity. We think that's going to get some positive attention sooner or later. But this all goes back to the point that Data Cloud isn't a unified product and revenue segment on its own. It's basically an add-on with a free introductory tier for existing Salesforce customers. Again, it's designed to be a single repository for a company's Salesforce specific data, with maybe pulling in some other outside data as well, and then grabbing all of that data, so that a company could build or use it to build some sort of AI system like RAG, retrieval augmented generation, basically a type of LLM that utilizes a company's own specific data to augment the results that come out of the LLM.
One thing about the business model for Data Cloud specifically is a little bit different than the software as a service or subscription service that Salesforce has in general. Data Cloud and the RAG Agentforce product that's built on top of it are a consumption pricing model. The more you use or the more data you store, the more it costs. These are definitely an upsell from the subscription plans that Benioff helped pioneer 25 years ago. There is a free tier, but the cost of all the Data Cloud features ramps up really quickly. Clearly, cost controls are still a work in progress, making this product best suited for large enterprise businesses.
Yeah, and that makes sense. This is kind of what a lot of software AI companies are dealing with right now. How do we drive down the cost of these new types of AI and the very, very large data sets that they rely on? These companies are working on that. Salesforce probably is as well.
Salesforce revenue has decelerated significantly in the last few years, but you can see that there's a bit of an uptick expected going forward. Is that because of AI?
Yeah, I think that's definitely the 30-40% run up in the stock price the last couple of months is absolutely that. There's expectation that after just 8% year over year growth in the last quarter, next year, fiscal 2026 for Salesforce, or maybe fiscal 2027, that would correspond with calendar year 2026, we get an acceleration again in the revenue, perhaps back up to 10% year over year growth, maybe a little bit higher than that. And then along with that, because Salesforce is doing a much better job of controlling its costs as of late, there is still this expectation that adjusted, not GAAP, but adjusted earnings per share will slightly outpace revenue growth. Some of the margin expansion story is now played out again on an adjusted basis, not completely, but some of the biggest gains might actually have already happened, but still a little bit of expectation here for, let's say, low to mid-teens percentage earnings growth for Salesforce. And so that was why 3 months ago we said that after the yet another sell-off in the stock, we thought Salesforce looked pretty good. We were pretty bullish on it still, but some of that cheapness might now be gone, right, Casey?
It certainly looks that way. The recent run gets it back closer to fair value on a price to free cash flow trailing basis, 28x, and on a forward 1 year basis, price to free cash flow right around 26, 27x. And the free cash flow per share is, we're assuming, at least low to mid-teens percentage growth over the next few years.
Yeah, significant slowdown from what they've been posting in the past. And so, in summary, we think it's definitely time, unpopular opinion here, but definitely time for another splashy Salesforce acquisition. Perhaps Benioff has been just being patient and waiting for the right company at the right price, and that the acquisition of the AI and data company OWN was actually quite small, 400 million for a company the size of Salesforce, not that big of a deal. They can gobble that up with basically a quarter's worth of free cash flow, and it doesn't make much of a dent. You can see from the balance sheet here, Salesforce is still in pretty good shape. 17, 18 billion in cash and investments, about 8.5 billion in debt. So they definitely have the room to go out and go shopping should they choose to do so in the future. And we really have become of the opinion that's probably what needs to happen to kind of continue to jumpstart that data cloud and some of the new AI products that they're trying to push. And the organic development of these things is great, but things have changed very quickly. And we think Salesforce could really use some help, especially on the back end, maybe moving down the stack towards the infrastructure side of the software. They could really stand to go out there and make a purchase of someone to jumpstart those efforts.
So let's talk about our slight adjustment to our portfolio. We're going to be making some final moves to get us to our 5% cash or equivalent goal for Q1 of 2025, and trimming our position in Salesforce could get us there. We will be keeping the bulk of our Salesforce position. We'll be monitoring it going forward, but we're going to shift our focus a little bit going into 2025.
Yeah, Salesforce is our oldest enterprise software as a service holding when we were looking for a place to start investing in that industry many years ago. Salesforce, one of the pioneers in the whole enterprise SaaS movement, seemed like a good place to start. So it became actually quite large position in our portfolio. However, another one of our oldest holdings is Vanguard Information Technology ETF, or ticker symbol VGT. And that thing actually averages a mid to high teens compound annual growth rate over the last 20 years. So whenever we're looking at a software business, our default is this software business have the ability over the course of the next 5 to 10 years to outpace VGT at a mid to high teens growth expectation? And for Salesforce at this point, I think the answer is we're not sure. So that's the other reason for trimming. It's not just about getting that cash, but we're starting to wonder, as the company matures, we're still waiting to see what happens if there's an acquisition. Will the AI accelerate revenue and earnings growth again at some point? Perhaps VGT is just a better place to stash a little bit of cash. So again, still not selling the bulk of that Salesforce position. We're happy to continue holding, but it's time to just tighten up a little bit on this front.
We'll be sharing more about our top positions in our portfolio headed into 2025 in our Discord server. Link in the description below to get access to our Semiconductor Insider membership. Thanks everybody for watching this episode. Make sure you hit the subscribe button, the like button, share with your friends. We'll see you again soon here at Chipstock Investor.